Our chief equity strategist and economist, John Blank, says the building products retail industry, part of the home construction market, is hot right now. He's here now to tell us why. So home construction is at a high. Is that correct, John?
Yeah, Terry. I looked this morning at the 10-year U.S. Treasury, which is you basically put 200 basis points on top of it for the 30-year fixed-year mortgage, and it is 1.54%. So people are being able to get into 30-year fixed-year mortgages at 3.5%, and that's driving a lot of activity out there.
Is that the main driver?
Yeah, it is. It is. It's along with it, the secondary driver, I think, is people are taking cash out of stocks and starting a remodeling boom. I think a lot of people are saying, hey, we don't see the home equity loans that we used to see 12 years ago, but we do see a lot of remodeling, and I think what people are doing is cashing stocks out.
But didn't I read recently that construction spending for December slipped by a couple of tenths of a percent? Is that an issue?
No, I mean, that could have happened for holiday season reasons that people don't do construction around that time. People take the holidays off. I expect that's what it was.
So do you expect the strength in home construction to continue throughout the year?
Yeah, I do. I think this is going to carry on because I think the interest rates are going nowhere but down, because I think we can expect another 25 basis point cut from the Fed funds rate because of this coronavirus weakness, giving them, the Fed, the room to basically get involved with another rate cut before the election.
But what we're talking about here pertains to a specific part of the home construction industry, building products retail. So does that necessarily speak to the entire home construction market?
I don't. Yes and no. I think it does. I think certainly we're also seeing, starts and existing home sales do quite well in this environment. So in that respect, yes. However, I think also we're not seeing things spill into the auto sales is really where the issues are. I don't see that picking up, and I also see a lot of automotive delinquencies because I think there's been a lot of risky lending in the automotive industry, but it doesn't seem to have affected the home mortgage industry, and that's something to watch for.
As far as construction, John, is there a global impact here or just here in the U.S.?
Well, why it's global is this is a U.S. domestic industry that supplies construction jobs that are like manufacturing jobs, and it also keeps the consumption growth rate in the United States up, which is supplying a GDP growth stimulus to the United States. And frankly, 2/3 of the manufacturers in the United States are in a recession because of the trade wars, and that's going to get worse with the coronavirus and more ongoing tit for tat with other nations. So this is the spot that's keeping the United States afloat, and we need to keep an eye on it.
Do you see this strength spilling over to the building products for commercial building?
Yeah, we already see it. There's no question it's happening, and I think that we should expect more of it. I mean, I know the real estate sector is also a very strong stock sector, and things like Jones Lang LaSalle should be watched too.
All right, so let's talk about some of these stocks that you're eyeing up right now. Lowe's Companies, Builders First Source, and BMC Stock Holdings.
Yeah, let's talk about Lowe's. Lowe's is a number 2 ranked stock, ticker LOW. It's $125 a share, but what's beautiful about it is it has a value rank of B and a growth rank of B. You don't see this very often in stocks this late in the cycle. So they report earnings, by the way, on the 26th of February, which is next week. So you want to pay attention to this stock as a short-term surprise trade because they can certainly outperform next week with their earnings.
And then Builders First Source.
Builders First Source, this is actually a number 1 ranked stock, but again, a value score of B and a growth score of A. This is a tremendous stock. It's got a much higher beta, almost a 1.85 beta, so it's close to a 2 beta. And these are smaller companies you probably haven't heard of. They're more regional. They're kind of like regional Lowe's and regional Home Depots, but sometimes they have more prefab, building of joists and things for actual construction. They tend to be in the South, and that's true for these other 2 names. And
then BMC Stock Holdings.
Yeah, BMC Stock Holdings is Exhibit A of another small group that's down in the southern area of the United States. It's BMCH is the ticker. Here you've got a value score of A and a growth score of A. So this stock is just way overlooked. You really should take a look at this stock. It did get up to about $31 a share for 29. The year-to-date chart is looking excellent. If they some consolidation at 31, it could push on from here. The forward PE is only 15 in this stock. You're not going to see that very often in a growth area for the United States stock market right now.
Chief Equity Strategist and Economist John Blank, and with John, I'm Terry Ruffalo, and here's a reminder. You can get advance notice of positive earnings surprises. Zacks Research Breakthrough now predicting with near 80% accuracy which stocks are going to beat earnings expectations even before their reports are released. To find out more, just visit Zacks.com/promo for details.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.